Hello everyone, I'm John with JP Strategic Investments, and today I'm going to explain in detail why almost every PE ratio you will find for Rocket Company stock on any website or app is wrong. And I'm also going to touch on some news that we got this morning that's likely contributing to Rocket's upward move today. As always, if you enjoy videos like this, don't forget to like and subscribe, and with that out of the way, let's dive right in. So first of all, this morning we learned that Intuit's popular personal finance app Mint will now be offering its users Rocket's fully digital mortgage experience. The press release on this states that Mint users will now have the ability to go from application to an accurate rate confirmation and approval in as few as 8 minutes, a process that normally can take days. Now, keep in mind that Rocket customers have had access to this for some time directly through the Rocket app and Rocket website. But Mint will be the first outside platform to host this service from Rocket. Rocket actually partnered with Mint previously on a similar product for home refinances, which turned out to be very successful. Rocket is hoping to have that same success with this product going into spring, which is seasonally a competitive home buying environment, on top of an already competitive environment created by low rates and low supply. This is really a game changer because it means that you could literally be driving down the road, see a home for sale, stop in to check it out, and if you like it, you can get approved for a loan right then and there on your phone and put down an offer. With many homes right now selling after only a few days on the market, this product offers potential homebuyers a huge advantage. This release with Mint, along with dividends being reinvested, is likely why Rocket stock is up today. So now that we've covered that, let's get into Rocket's PE ratio. So generally there are two types of PE ratios, a trailing PE and a forward PE. A trailing PE divides the current share price by the combined EPS for the last 4 quarters. A forward PE ratio divides the current share price by the estimates for the next 4 quarters. And if you're looking at a website or app and it displays the PE ratio for a stock, it will almost always be the trailing PE ratio unless otherwise stated. So I've put together here Rocket's GAAP EPS for the last 4 quarters, which in total is $3.39. So if we divide the current share price by $3.39, we end up with a PE of 7.06, which is obviously very low. So why do so many sources show Rocket with a much higher PE? Take Google for example. Google's finance section shows Rocket with a PE ratio of 14.08. That's basically double Rocket's actual PE ratio. And even if we take a look at Charles Schwab's website, they're pretty much showing the exact same thing. So what's going on here? Well, if you take a look at the top of this screenshot here, you'll notice that Schwab lists Rocket's trailing 12 months earnings at $1.63 per share. But I just showed you the numbers directly from Rocket's financial statements that clearly states that Rocket's earnings for the past 12 months were $3.39 per share. So why is there this difference? Well, I dug a little further and I noticed that Schwab only lists Rocket's earnings for Q3 and Q4, and the total of these 2 quarters GAAP EPS is $1.63. So I actually called Schwab and explained the problem, and the representative from Schwab explained to me that because the first and second quarters occurred before the company was actually public, the system does not include these quarters in the calculation for the PE. Now, I pointed out that this was very misleading and that it would be more accurate in this case if Schwab just left the PE ratio section blank rather than listing an incorrect PE ratio, which, by the way, is what Yahoo Finance and Nasdaq.com do. He actually agreed with me completely, but told me that unfortunately he couldn't do much about it because Schwab imports the data from a third-party vendor like Morningstar or Bloomberg. So basically, if you see a PE ratio for Rocket currently listed at about 14, this is probably what's happening. Unfortunately, this misleads a lot of investors into believing that Rocket stock has a much higher valuation than it actually does. Obviously, a PE ratio of 14 is very different from a PE ratio of 7, and it's frustrating to see this type of misleading information published by major websites and brokerages. If you're a Rocket investor, please like this video, comment below, and share it with other investors because it's very important that potential investors have an accurate understanding of the valuation of the stocks that they are looking into and buying. I hope you guys found this video helpful, and if you did, please consider liking and subscribing, and feel free to leave any questions in the comments below. Other than that, see you next time and have a great day.